Hey guys, welcome back to another episode of Blockcast. It's just Simon today, and today I'm going to talk to you a little bit about risk to reward on Bitcoin and Ethereum. In the last few weeks, Bitcoin prices cooled off. We've had about a 10% drop in prices, and the bears are back. Everyone's saying, look out, going back to lows. The 12K mark is coming back in, and I just wanted to have a look at some of the numbers, look at the charts, and do a bit of maths to sit there and say, well, what's the risk to reward here in the pricing and where it can go in the future. So let's get into it. So people who are watching on the video, you can see the charts. Everyone else I'll explain it to, but the price currently is at 22,400 for Bitcoin. And so let's have a look at realistically where it could drop down to, what are people basing these prices off, and then, where it can go back up to really gauge our risk to reward here. So a lot of people saying that we could be heading back towards the lows, which is, I've rounded it out here to 16,000. So what's the potential of us going back there? Well, look, we could go back down on that far. Let's face it, there could be some macro events that could force the prices down there. It seems really hard. It feels like the momentum has shifted in many ways. We've definitely lost a lot of that fear that was coming out at the end of 2022. 2023 has felt more vibrant. Like, could we have as much sell pressure as we did from the FTX collapse and that much fear? Seems unlikely, but hey, a huge macro event could do it. That's just my opinion. I could be wrong. I've been wrong before. But I've done some maths here because that's what I like doing. So I'm looking at going back down to 16,000 is a 30% drop, roughly a 30% drop to get back down to 16,000. Then what's even more greater risk? Well, people are talking about the 12,000 mark because that's a big kind of technical location for support. That's about a 46% drop. And then there is the kind of ultimate bear cycle finisher, which is BTC dropping 85% from its all-time highs. That's what it did back in 2018 and into 2019, going from the 20,000 down to the 3,000 mark. And that's the 10,000 mark. So we're talking here about the potential of to 16,000, a 30% drop, to 12,000, potentially a 46% drop, and then down to 10,000. From here, that's another 55% drop. So that's our downside. That's our downside risk. And when you're doing this, you've got to figure out what you think is actually likely. I think, in my opinion, we could potentially go all the way back down to these 16,000 lows, maybe, especially the big macro event occurs. I think going down to 12,000 and 10,000, I think that risk is behind us now because I think macro events, well, not macro events, but crypto events that have caused so much sell pressure have probably gone. But, global wars, who knows what could happen. So that's our downside risk. We could potentially go down as far as 55% down. So you're in this space though, which means you probably think the crypto is going to go up. I mean, you're watching this video, so I'm under the assumption that you think that crypto will actually go up. And so we know our downside risk. What's our upside from here? Where can we possibly get to? So I assume you think it might go back to its all-time high. We assume Bitcoin can go back up to 69,000. So from here at 22,000, that's a 300% increase. So you can 3x your money from here. So your upside potential is 3xing just to the all-time highs. Your downside, in what I think is potentially possible, is only 30% down versus 300% up. That's your kind of risk to reward. If you're in this space longer, maybe it's going to finally breach that $100,000 mark. If it's going to breach that $100,000 mark, well then let's get back on the graph here. We are way up here at 100,000. You are talking about 4xing your money. So that is the return that you could possibly get. And, maybe you're Kathy Wood and you've got a bit of a longer term vision here and you're thinking the $1 million. Actually, what would that be? Let me just do that. So if you're a Kathy Wood and you think it's going to get to $1 million by 2030, which is, look, a long-term view and a long-term investment, which is how I invest. I'm not a trader. This analysis is not necessarily for trading per se on a short time frame. This is definitely a longer-term wealth building strategy that I'm looking at for risk to return. So if you're Kathy Wood, you're looking at a 4,400% increase, or a 44x from here. So if you've got that viewpoint and you've got that longer term view going up to 1 million, I'm not going to put that in the graph. The risk to reward is 44x up versus going down half. It's a pretty good risk to reward. So if you're in this space and you think Bitcoin is actually going to do well, kind of what are you waiting for? If you think that it's going to go lower and you're holding back all your gunpowder till it hits those lows, you're taking a big risk there. That's a different kind of risk, isn't it? Obviously, it's an opportunity risk if you aren't in the market. Now, if you are right and it goes back down to $16,000 and you do go all in then, and then it goes up to the 100,000, yes, obviously your return is going to be far higher. But what if it doesn't? What if the prices don't hit those lows that you are after? Maybe you want to hedge your bets a bit, which is probably a good idea. In my opinion, not financial advice. Maybe you want to hedge your bets a bit and just start dollar cost averaging in now, because the reward potential is huge. The down risk is fairly low. Unless if you think it's going below $10,000, what are you doing in this space? It seems really unlikely. Crazier things can happen. Binance going might do that. Who knows? But the upside potential is huge right now. And so you don't want to miss out on that if you're wrong that's going to go down further. So maybe dollar cost averaging in, which means you're getting the price now and the upper price now. And if it goes down lower, you can still capture some of that. Let's look at Ethereum now, shall we? So Ethereum's current price is right now 1,570. And so again, let's look at the downside risks here. So the big kind of downside risks that people see for Ethereum is back at that 1,200 level mark, which is an area of strong support. We spent a long time in that area. Further back down is going back down to its recent lows. I'm not talking about the spike. I've just evened it out here on $1,000. It only briefly spiked below $1,000. So we're going to use that for just easy numbers. And then there is the larger retracement, which is going back down to $700, below $800. So that's our risk. I mean, can it go further than that? Again, sure. Just like Bitcoin, there could be some huge macro event that could drive it down lower. But just like Bitcoin, we've had all the fear of 2022. We've had all the deleveraging. We've had all, I guess, the fear in the marketplace kind of swept out. The people who had to sell and were forced to sell aren't here anymore. There's no more sell pressure, so people be unlikely to see many more people wanting to sell at that point in time anyway. So what's the downside risk from here, from 1,500? So down to 1,200, 24%. Could go down 24%. Down to 1,000, that's 36% down from here. And if we somehow break that previous low from almost a year ago now, I should say, we're getting close to a year ago, down to below 800, the 700 mark, it's a 53% down. So that's the risk going down from here. What's the upside potential? So back to 4,900, back up here from current prices, that's over a 300% increase. And that's only if you think it's going to go back to all-time high. If you're in this space, unless you're a Bitcoin maxi, you probably think Ethereum can go higher than that again in the next couple of years. So what if it gets to 10,000, which is a fair price, and there'll be a fair resistance because it's a big round number. Do you think it can get there? So from there, that is over a 640% increase from here. And maybe it's going to go crazy. Maybe it gets like 15,000, who knows? But that's the real longer term view of it. That's 10,000, so 10xing of your money from here effectively. So again, risk to return, downside risks of around about absolute worst case scenario, potentially 55% down. More likely, 1200 could be revisited, definitely. Maybe 1000 gets revisited, but that's 25 to 36% down price from here versus 300% up to 10,000, 600% up to 300% up to all-time high 5,000, 600% up to 10,000. It's a pretty good risk to return, isn't it? And again, if you're in this space, you've got to be assuming that these are going to be going back up as adoption comes into it. That's the reason why we think it will go back up. Adoption, more adoption by the space, more users coming in, more demand on the blockchain, more demand on Ethereum, more apps being developed, more projects being launched, successful projects, not just any old project, but any old project, I guess, adds to building more people, systems, users, experiences in the space. That's got to drive more Ethereum use. That's got to drive the price of Ethereum up. So upwards potential to 10,000 is, I think, reasonable. 6xing your money from here. Down, worst case scenario, realistic worst case scenario, 36% down. That's risk to return there. 6x up, potentially losing 30% of your money going down. So again, if you're waiting for this big capitulation down, another movement down, if you think that the bears are in charge and we've still got to put in new all-time lows, you're taking a risk there, and the reward is still huge on the other side of it. Again, if the price goes down and you do load up, then great, you've put yourself in an even better position when the price goes back up. But you're taking a risk if it doesn't get there. Again, not financial advice. This is where dollar cost averaging comes in. You're hedging your bets to a degree. You want to have exposure now because you want to make sure you get that upside potential, but you don't want to risk necessarily missing that opportunity. What do you think is up to you? Whether you think the prices are going to go further lower, you may be right, you may be wrong. Just where do you want to sit on that risk level? Do you see the potential of it going up in the future? You do, you're here. Do you want to miss out on that upwards price movement? It's up to you to figure out when and where you want to deploy your money. But I think if you're waiting for lows because you're expecting further lows, you could be missing the upside potential. So maybe think about hedging your bets. Again, not financial advice, just my opinion. I hope you enjoyed that one, guys. I'll catch you next time.